Hi there. So it's great that we send out invoices to our clients. We'll just quickly go over that. So if I go up here to plus new and go down to customers and then create an invoice, I'm going to create an invoice here. I'm going to send one to Fred Flintstone. And we'll pick an invoice date. I probably should have sent it out on January 15th, so I'll just backdate it a few days. And the product that I'm going to be sending out is going to be, let's say a jazz class. So this jazz class, well, it has a rate of $50, but that's on a per month basis. So I'm going to charge him for 3 months because that's how that works. And that's how I would create the invoice. So I would click save and send. In this case, I'm just going to close it. So it's all great that we're sending out that invoice that starts showing us our income and that starts building that profit and loss statement. But Fred is going to pay us. So this is how we're going to receive that payment. We're going to go here to the plus new section. We're going to go down to receive payment. Now I may have, and then I'm going to type in his name. Now he owes us a total of, if I add all that up, $375. But he knows he's going to be purchasing more items from us. So let's say he paid us $500. So we're just going to go ahead and on that payment date, today is the 19th, he paid us by EFT. I'm just going to say direct debit, and I'm going to deposit that right into my business bank account. So the Acme Co checking account. And I'm going to say I received $500. Now QuickBooks is going to turn around and automatically apply it to the oldest items and automatically apply it to what they think is logical. In this particular case, because he's paid us $500, he's more than adequately paid off his balance. And what will happen is on the bottom here, we can see this word amount to credit because he has overpaid us by $125. So this transaction will create an additional credit of $125. So we're going to go ahead and save and close that. And if we go into sales, customers, and then look at Fred's account, we can see here that it is in a negative position of $125. And what that means is that he's issued us a payment and we no longer have an invoice to apply that to. So let's say it's February 1st and he goes, I want one more month of jazz class. So I'm going to go here. I'm going to create an invoice. I'm going to say Fred Flintstone. And I'm going to date this in February because we've advanced time and this is February. I'm going to type in jazz class and I'm going to say, sure, 1 month of jazz class at $50. And I'm going to save and close. And what will happen is QuickBooks will then turn around and go, well, you've created an invoice, but he has a credit, and will automatically apply that. And so now we can see that there's still a balance on his account that he's overpaid, but now it's $75 because we're starting to chip away at that overpayment. If you like having a little bit more control and you don't want QuickBooks to automatically match those invoices, you can go here into your gear icon under your accounts and setting, and I believe it's under advanced automation, automatically apply bill payments. If you just go here and turn that off, what will happen is, automatically apply credits, we're going to turn that off. And what will happen is when we create that invoice for Fred, it's now March, and we're going to send him an invoice for the March jazz class. Instead of it automatically paying March, save and close. Instead of it automatically applying, it's going to sit here and go, well, you have an invoice that hasn't been paid, and you're just going to go here to the receive payment. We're going to apply this as of March 1st, and we're just going to apply the credit to that outstanding invoice. So many ways of doing that. So it's a great system, and yes, you can take more money than what they actually owe you.